Hello guys, and glad to have you on board again today. I feel very sorry for you, but I will do it today because I feel like I have to. I'm not going to bring anything new to the previous updates and things that have been said previously. It's really stayed the same. It's not about that. It's just that I can feel the heavy amount of stress and irrational behaviors surrounding some market participants at the moment. So today is just going to be another off series about specific crypto psychological behavior and how some people are getting so dangerously exposed to these markets that only the worst can happen. Not necessarily now, but it will definitely have some severe consequences down the road if you don't change these behaviors. So let's talk about that today. And most importantly, out of stating all over and over again the same old technical assessment, there is no such a thing as a technical bear market. The only thing that exists is volatility after a huge and dangerous distribution pattern that we've seen on the market top. These are very rare behaviors, but we've also assessed the fact that as of recently, we have definite targets and clues that have been reached out to let us believe that we now have the opposite behavior in the market participants, which is after the distribution pattern, we're now having signs of an accumulation structure taking place. Though first and foremost, these patterns are technically very rare, so don't look for these patterns everywhere. When they occur, you might want to see them, but you definitely not might want to search for them everywhere. So, that being said, we've already stated that multiple times, so I hope this is known by now, and if you have listened to me in the past, and if you still have good mindset over your personal behaviors regarding trading, you are able to be patient. It might be uncomfortable, and I will totally agree with that. As long as you can hold on to your plan, I would say that's fine, and I'm not going to bring anything new today, so you can just skip ahead and go to whatever else you might be doing now. Enjoy some vacation, summertime, sun, whatever you might be doing is going to be anything but better than looking at a YouTube video. Anyway, for all others who are still suffering huge psychological mismanagements or impacts, I'm going to try making yet another video trying to dive even deeper into the psychological mindset you're into, the mistakes you've made, and the ones you might not want to add up to this as of right now. Things that have already been said, but I'm going to say them over and over again. If you are suffering massive psychological impacts now, means you've been making several mistakes in the past already. So now is the choice for you to eventually make more mistakes, or just at least stop making some. Hopefully you will survive this unpleasant period, but still that doesn't mean it will necessarily be the case. If you have piled up so many mistakes that you will inevitably die, well, I hope you'll at least learn the lesson. Stay the fuck away from the markets ever. Okay? If you end up losing all of your capital because you've been betting on the future of crypto using leverage and got impatient, so you reinforced the position to leverage even more till the point that if we ever drop below 30K, you will lose it all. Well, if that's the current situation you're into, I'm sorry folks, I can't do magic. You are in a position in which, to be honest, I don't know shit about where the market is going, and if it turns out that it flushes you out in the meantime, well, you shouldn't have done such a mistake in the past. Not to say that I warned you so many times. I'm sorry guys, but if you've made that mistake, you're never going to recover. It will take probably years to get over with the psychological mismanagements, which means, let me be honest, you will never be able to be a trader someday. You'd rather like to be honest with you and move on to something else. There are several other options in life to be successful rather than being a trader. If you have piled up so many mistakes that you will lose it all, then don't even think about getting up and coming up for this, making the money you've been stolen, and so on. You'll just be in the worst ever mindset for the rest of your life toward trading. So just be humble, stop, and move on to something else. There are way more important stuff than trading in life. Just don't try to come up for your losses. Just move on and stop. Okay, that's the first thing. For those who will survive, because I mean, I'm sorry to say it, but normally most of you guys should survive. So if you do survive, there are two things you're going to be needed to be done. The first one is never, ever, ever, ever do it again. Learn from the mistakes you've made. If you're smart enough, you might understand that I told you so since the first fucking days, and you still decided to do it. So maybe the next time you'll listen to me a bit more. I'm not saying to blindly follow me. I'm just saying that next time you might be listening to someone a bit more experienced than you are. Okay, so that's the first thing. The second thing is that you might want to uncover each and every step that led you to this chaotic behavior. To be honest, I've already told you so as well, so you've got more than clues, you should be able to figure it out. You've over-leveraged yourself because you got impatient and you feared uncertainty, which means when the market was doing something that you basically couldn't figure out because, oh no shit Sherlock, we're in ranges, the most chaotic structure ever built, and most importantly, the accumulation structure is just the most complex, purposely built, stupid ever structure. So it's meant to create chaotic behavior and erratic decision-making processes. So congratulations, you just fell for a professionally handled pattern. Now, if you're looking for someone responsible, I'm sorry to say it, there is not such a thing. The Wyckoff pattern, in which we're going to be talking about today, not something that one person is responsible for, not even 100%. It's something that just can't be pulled out like a string. It's more like a behavior of smart money managers that want something against dumb money managers that have these something. So to be honest, I don't know for sure, and only the future will prove me right or wrong, but that is what I think is going on now. That's the reason why I am also trying to profit from the Wyckoff distribution and accumulation pattern. I've totally missed the distribution, and I'm so dumb because I should have seen it. Now the accumulation is something I would like to be profiting from. So that's also the motive for multiple professional traders. I'm definitely not the smartest one out there, so if I've seen it, you can be damn sure the others have seen as well. So we're all adapting our behavior toward these probabilities of a much more longer and complex range structure. Congratulations, you just have the explanation of who's responsible for the Wyckoff pattern application. Most importantly, people like me who are aware of psychological mismanagements of inexperienced traders, and the fact that some smarter traders might be willing to buy these assets. So they're going to use whatever hedge they can have on others. And the only edge that a smart money manager has against a dumb money manager is exactly what you have in front of you. Putting chaos, time contraction and expansion, chaotic, futuristic structures that you will guess and try to understand, which there is nothing to understand about, but the fact that it's only meant to trigger psychological mind states. And when we reach those mind states, we will generally see an overall structure picturing itself, but the overall structure can just not be anticipated. That's the beauty of it. That's the beauty of each and every psychologically related pattern in the market. These are things that professionals feel, but beginners suffer from. So if you suffer from the current market behaviors, well, that just means you are less experienced than I am. And no shit Sherlock, that shouldn't be a surprise. So if you suffer for psychological mismanagement now, well, you're just right in the expectable spots for you to be. The only things you might not want to do is to fall for it. Feeling the pain is exactly what's meant to be done. Suffering the pain, yes. Falling for it, definitely fucking no, because you have to understand one very important thing. The accumulation pattern means that the smart guys wants to buy. Everyone now is trying to think if there is going to be a bear market or whatever else they might be foolish about when it comes to FUD spreading, or definitely stupid traders in YouTube talking about things day after day they don't know anything about. Well, despite that, that just means one thing to me. If we have something that looks like an accumulation pattern, just means that the smart guys wants to be in. Otherwise, we would just have a regular bear market. That's pure and simple. It doesn't follow any regular bear market structure, so I'm sorry to say it. Sure, I might be wrong, and eventually we will be in a bear market. But try to be honest for a second. That is my job. I am a statistical professional money manager, and I know the shit I'm talking about. So let me be real honest about how you should handle these things. First and foremost, if you've put all your money into crypto, well, I'm not a magician and I don't know anything about the future. Oh, sorry about that. But I do know a bit about statistics. And the first thing is that if you ever let yourself being influenced by something that has so little probabilities to eventually show up in the real world, well, congratulations, you suffer from psychological mismanagement disorders, basically paranoia, anxiety, and all of these things that might necessarily at some point need some medical treatment. So I hope you are not that mad, but this is what the Wyckoff accumulation pattern is meant to create in your brain. Psychological disorder to the point that it will be forcing you to act due to some enormous amounts of psychological pressure. So I'd rather like you guys not to lose some money, but I don't want you guys to turn mad in between. So be aware of what's going on. What's going on is meant to create irrational behaviors, not things that you control, but things that you will get down to so much pressure that you will act without knowing. Okay? So be aware of it. It's meant to create irrational emotions, and it's definitely good at doing so. Okay? So don't drive yourself crazy. The only thing you can do to fight against this thing is just no more than I told you so many fucking times these latest weeks. Don't look at it and stop thinking about it. But you will tell me, Phil, I've tried so hard. I just can't do anything but to look at these goddamn markets. Well, I'm sorry to say it once again, you'd rather like to take a shrink course or any fucking thing else, but not look at a goddamn chart, okay? The more you look, the more stupid decisions you make, because the psychological mismanagement is something you can't go beyond. You will just suffer it as much as you look for it. So be aware of one thing. I'll try to help you the most rational thing I can. If you don't get this one, well, I don't know how to do it. In the real world, you're aware of stuff that can happen but have very low probabilities to show up, like winning the lottery, or let's go for something less pleasant that is going to be closer to what you think now. Hit by a bus. So, what are the reasonable probabilities for you to be hit by a bus as you go out of your personal home? Well, statistically speaking, it happens. Some people definitely died of being hit by a bus. What are the reasonable probabilities for these to come over for you, to show up? Well, you know these probabilities are very low. That's also the reason why you simply go out of your home without worrying about it. You know that statistically speaking, this is so low probabilities that you just can't bear that in mind. Otherwise, you would turn yourself a crazy person. Congratulations, now you just feel like something that is very, very less likely going to happen might be very well happening. So you are just like someone who's getting so high level of anxiety that you're turning paranoid. You think that if you go outside, you might be dying. Well, just like right now, you think that because the crypto market doesn't rebound, it's going to fall off the cliff. There is no technical reason supporting this. Okay? Now I'm going to try arguing about that by just putting rational technicals in front of your personal behaviors and thinkings. Most importantly, the Wyckoff pattern has an alternate structure that you might not necessarily know about. This alternate structure is based on a typical market behavior that I think is exactly going on now, which is also the reason why I think people are getting irrationally bearish now, because now everyone has learned about the Wyckoff accumulation pattern, so everyone knows that it terminates as a massive downside swing called the spring, in which people suffer from massive losses where inevitably the smart guys takes it all out and buy the dip. Okay, great. That is the supposedly workable Wyckoff accumulation pattern. Now, if you've understood everything that I just said so far, it's not one person behind that. It's multiple persons adapting to market conditions with patience and method, who will take the money at least as much as they can because they are here to buy. And when they will buy as much as they can, market will reverse. They don't know how much they will get. They just try to get as much as possible. Okay? So Try to think it that way. Now that everyone's aware of the week of accumulation pattern, that might be terminating as a spring and whatsoever, now that people are selling onto a support, what do you think the smart money managers are doing now? Do you really think we're selling to get you guys to buy with cheaper coins? No, we do not do such a thing. We just think that it might be going for an alternate structure. That's exactly the reason why I've been looking at alternate week of structures. Oh, congratulations! It wasn't very complicated until I found the alternate major structure, which is not going for a spring, but going for something a bit different. And guess what? I just scratched the surface and clap, clap, I just came up with everything needed, and all of the technicals I have so far just goes suggesting this is what the market might be doing now. And I'll explain everything, okay? So, this alternate structure comes from the fact that normally the week of pattern is supposed to maintain high level of volatility, okay? So high lows and swings, that goes from top to bottom of the range to just basically create the stupidest ever market behaviors. We're supposed to both break resistances and supports so that the volatility is on an expansion pattern, and that creates the highest level of tension in market behaviors, and specifically for those who lack of experience, because this pattern, instead of showing up in short-term time frame, will occur in very long periods of time, which means psychological mismanagements will come from chaotic breaking both supports and resistance structures, and this is by volatility that the money gets transferred from the dumb guys to the smart guys. This is the Wyckoff's #1 accumulation pattern. Wyckoff's #2 accumulation pattern comes from a slightly different outcome, and Wyckoff themselves explain it that way, period. I'm just telling you about what the guy says about his own pattern. In some specific rarer cases, an alternate structure creates itself by the lack of the so-called supply, which means the guys who are trying to get control over the market, who are there to buy, will not find sufficient enough supply to fulfill the demand. At some point, they will understand that only time can help getting more supply, till the point the supply will simply not show up. No one is selling, so we are going to soon be forced to buy without sellers. And at some point, those who were sophisticatedly were supposed to work all together to get as much money as we can by creating irrational volatility into a support level, will sooner or later start to work one against another. Each other, because we all want to get a grasp on this market, but we all start to understand that will not be enough cake for everyone, so we are going to start buying ahead of the other guy. This is what I think exactly is about to go on now, and I'll explain. In this situation, the key and crucial element, technical element to get over with this, despite the psychological behavior, is the fact that at some point the market participants, so-called manipulators, those who have the money, the whales, are going to work against each other instead of working all together, because they will, and that's the key element, start to figure out that there is not enough supply for everyone to be fed. And in that perspective, okay, this is where the psychology might change, and in that perspective, Wyckoff says the pattern doesn't play out as expected. Instead of getting the final burst of volatility, which requires people to bring in some external supply, some people that will borrow some coins to short sell the market for the final flush, will simply not accord to do such a thing. They will start to doubt themselves that they will be able to buy back the coins they sold. And as this sentiment starts to ripple, instead of going a final flush, we're going in a bluff, a big nothing. Nothing happens, the volatility disappears because we're all looking at the neighbor and trying to figure out if it's going to sell, and then, at that point, just nothing happens. Time passes, no one sells, because the dumbest guy simply can't fall for the trap anymore. They wait for this. They provide the very little supply that these guys will buy very discreetly without letting the neighbor know, those who will be dumb enough to sell at average prices will be slowly but steadily bought by the smart money guys who will, instead of working all together, work one against the other. And as prices will not fall, more and more time will pass, and the smart money managers will get to understand that this is not the same party anymore. Till the day they all figure out that the party is over and that the only thing left is to buy a market without sellers. That generally causes a small, very boring market reactivation, yet toward the upper area of the range, where both pattern, the number one accumulation type and the number two accumulation type, all come together to the top area of the range where the sign of strength patterns show up, which precedes the end of the accumulation structure. It all comes to this: if we ever get to this sign of strength, no matter which accumulation type we've gone for, it all terminates out there. This is where the psychological pressures end, because at these points, market participants understand that the pattern has played itself. Whether it's number one or number two, it's too late. At that point, we only have buyers in an unsupplied market. And that is the thing we might be experiencing. I goddamn don't know if we're going to get a spring or if we are not going to. All I can say is that now I'm looking at technicals. Here's what I have. Let me just have a look at this. Daily chart, squeezing momentum, volumes going down the ground to historically low level. We haven't seen such low volume even down there. I mean, even July 2020 wasn't that low in volume, or we would be eventually compared to what happened in July 2020. That wasn't even before the actual bull market triggered. So, historically speaking, volumes are currently so low that the volatility itself is non-existent. And yet, I see people betting on the spring to come, being comfortable enough to say that it is smart enough to start selling to buy again at cheaper prices. Let me be real honest, I think we've already started the next phase in which the smart money understood that there will not be enough supply for everyone to feed. So they probably are starting to buy those who are willing to sell. And I think that's really what's going on now. And I have technicals suggesting that this is not just an illusion. Most importantly, I feel the pain, which is exactly what I think dumb money managers are feeling now, into much more exacerbated visions. If you are panicking now, anticipating the dip, just trying to figure out how much you would lose if the market goes to 25K, and eventually if it goes out there, why not going to 20K? Why not going to, I don't know what the fuck people have put it into your brains? It will not happen. It's probably not going to happen. The probabilities for these to show up are just equal to the fact that you would just take a bus right into your face if you were going out your home. You know it is still probable, but Jesus fuck, you still go out. Just like you take a plane even knowing that there might be some very rare case accidents. You also take your fucking cars. This is the deadliest way of transportations ever seen in the entire human history. So, Jesus fuck, you still drive a car. So if you intend to trade the markets, not just for Bitcoins, but for the future, you might damn well think about that. If you want to be on board that train, you must not fear the train. Something that has very little probabilities to show up must not scare you out. If you've made so many mistakes down the road that it will push you out this game, like I said, I think this doesn't really worth trying again. The psychological mismanagement will probably be so deep that you will face denial, fight or flight response, but you will definitely not be able to trade again after such a thing. You've made so many mistakes. If you lose it all and take all your savings off the table because you betted on Bitcoins, means you've already made so many mistakes. And at the current given time, there's nothing you can do about it. The only thing you can do is to let it happen, whether it is for the good side of it or the worst side of it. But there's nothing you can change. So either way around, even being in the worst positions now or in a much more comfortable situation, which means if it goes down, you're going to just lose some money, But normally over time, this should play out its way to the upside. And if it does not, well, maybe we've invested into bullshit. And in that perspective, I hope you have some money elsewhere. Because rationally speaking, this should impact your life just as much as you shouldn't even think about car accident when you get into your car. I don't think about the bear market because rationally speaking, all of the facts I have in front of me suggest this is very low probability. Still possible though, just not technically viable to think about it. Okay? This is not overconfidence. This is just my fucking job for 10 years. And let me be real honest. I know it can be impactful when there is a bit of money on the board. But this is a mistake you should never do again. So the only thing you might process out of this thing, if it turns out to be successful, is to never ever replicate that again. Never put your money into a single asset or correlated assets. Never put too much money into the single stuff. Diversify. And all of these things means you will probably be a better trader tomorrow if you are smart enough to understand that the mistakes you've made so far must not ever be replicated. That being said, I wish you guys a pleasant day. I'm sorry this is a long video today. Again, I hate having to talk about desperate behaviors and mismanagements, but I think like I might want to do it. So I hope it helped you one way or another. If it did not, well, eventually that's just yet another video that will end up in the tube without reasonable knowledge in there. Otherwise, see you guys into the next one. Okay? Whether you're going to lose it all or not, there's only one thing to do now. It's to hold on. So let's be honest, the more you look at the charts, the less you're going to be able to fulfill that promise. So just stop looking at charts. And you're going to say, this is absolutely impossible for me to do such a thing. I can't sleep, whatever. Just be smart enough to understand that at that point, it's not a YouTuber's help you need, but some real shrink. Okay? If you can't sleep because of trading, still being able to figure out that there's nothing for you to do about it, but to just wait. If waiting is so painful, well, if there's something you need to do, it's not to close the positions. It's to see a fucking shrink. Okay? See you guys later, and I hope I eventually helped you someday with this thing. Bye, guys.